Running a school or training center in Kenya comes with more than just delivering education. It also means meeting your tax obligations and knowing which ones apply to you. In this video, we'll go over the taxes and statutory deductions that learning institutions in Kenya are expected to comply with. Let's break them down clearly and practically. If your institution pays salaries to teachers, admin staff, or support workers, then Payee applies. It's a tax deducted from employees' monthly income, and it must be remitted to the Kenya Revenue Authority. This includes salaries, housing allowance, and even bonuses. Filing is done monthly through iTax. Failing to file a remit on time can lead to penalties and interest. Next, we have NSSF and NHIF. While they're not technically taxes, they are mandatory deductions. NSSF is for retirement savings. With new rates, employers contribute between 200 to 2,160 shillings per month per employee. NHIF supports medical insurance, and the amount depends on the employee's salary. These are submitted monthly, alongside your Payee filings. They're important not just for compliance, but for the well-being of your team. Now, let's look at withholding tax, or WHT. If your school hires consultants, like IT experts, lawyers, or auditors, or pays rent, you're likely required to withhold part of those payments and send it to KRA. For example, professional services often require a 5% withholding, and rent can attract 10%, unless your landlord is exempt. It's your responsibility to check your vendor's tax status and to issue withholding certificates. Most core education services in Kenya are VAT exempt. However, if your institution sells uniforms, runs a school shop, or operates a canteen, VAT may apply. Also, if you rent out space for events or offer unrelated services, those may attract VAT too. You must register for VAT if your annual taxable turnover exceeds 5 million shillings. Always separate your educational income from commercial income to stay on the safe side. If your school operates as a limited company and is not registered as a charitable or non-profit entity, you are required to pay corporation tax. The rate is 30% of your net profits and is filed annually with KRA. However, if your school is set up as a charitable trust or non-profit, you can apply for a formal exemption. But remember, this exemption is not automatic. You need approval from KRA. If your school offers paid online content or courses, especially to users outside Kenya, you may be required to pay digital service tax. This tax is charged at 1.5% of the gross transaction value, and it applies to monetized digital platforms or content sold to non-residents. If your school is moving online, it's something to watch out for. Let's recap with a quick summary. We have columns. Tax type applies to and frequency. Payee is for salaried employees in every month. NSSF/NHIF for all employees on a monthly basis. Withholding tax for rent, consultants, contractors done. Per payment VAT applies to non-core business activities in every month. Corporation tax for for-profit institutions, usually annually. And lastly, digital tax for monetized online services paid monthly. Staying compliant doesn't have to be overwhelming. At ACOTax Consultancy, we help schools like yours file accurately, meet deadlines, and even apply for exemptions where applicable. Whether you're just starting out or managing a growing institution, we've got your back. Call or WhatsApp, email, or visit our website.